All right, if you're gearing up for competitive exams in India, you know you have to pay attention when the RBI makes a move. And boy, did they make a big one on November 14th, 2025. They threw a massive lifeline to exporters who were really struggling. So in this explainer, we're going to unpack that entire package, what it is, who it's for, and exactly what you need to have locked in for exam day. Okay, so here's our game plan. First, we'll look at the storm, the global situation that made all this necessary. Then, we'll see who's on the hook to follow these rules and who actually gets the benefits. After that, we'll get into the nitty-gritty of the relief package itself, check out the fine print, and then wrap it all up with the key takeaways you'll want to screenshot for your revision. Let's get started. So, first things first. Why? Why did the Reserve Bank of India have to step in like this? I mean, to really get a grip on this policy, you have to understand the problem it was trying to solve. Well, the simple answer is that the global economy was facing some serious turbulence. The official term the RBI uses, and you'll want to remember this for your exam, is global headwinds. Now, that's just a fancy way of saying there was a whole mess of problems. Things like unstable international markets, completely snarled supply chains, and just fewer people abroad buying stuff. All of this was putting a huge squeeze on Indian exporters, making it incredibly tough to stay afloat. Okay, so we know why the RBI had to act. Now let's shift gears and look at who has to actually follow these new directions. Because when the RBI speaks, it's not a suggestion, it's a command, and a whole bunch of financial institutions had to listen up. And this brings us to a really important piece of jargon you absolutely need to know: regulated entity, or RE for short. This is the official tag the RBI puts on any financial institution that has to implement these relief measures. Think of them as the ones on the front lines, actually delivering this help. It's super important to know who's in this club. And as you can see, the list is pretty long. We're not just talking about the big commercial banks here. The RBI made sure to include cooperative banks, NBFCs, and all the major financial institutions. You know, the logic here is pretty simple. They wanted to cast a really wide net. This way, it doesn't matter where an exporter banks, they can get access to this lifeline. It's all about making the relief available across the entire financial system. So we know who's giving out the help, but who actually gets to receive it? This wasn't a free-for-all. The RBI was very specific, laying out a 3-point checklist to make sure this lifeline went to the people who needed it most. This right here is your checklist. A borrower has to tick all 3 boxes. First, they have to be in one of the specified sectors. Second, their loan account had to be classified as standard, which basically means it wasn't a bad loan, on the cutoff date, August 31st, 2025. And third, they had to already have an expert loan on that same date. Now, for your exam, here's a great mnemonic to remember this. Think ASO for exporters. That's Annex, Standard, and Outstanding. So what sectors made the list? Well, you're looking at the heavy hitters of India's export economy: textiles, pharma, auto parts, gems, the whole shebang. The RBI didn't just pick these out of a hat. These are industries that employ a ton of people and are absolutely vital for our economic growth. They were also the ones getting hit hardest by those global headwinds we talked about. All right, now we're getting to the heart of it, the actual relief package. We've covered the why, the who, and the which. Now let's dig into the what. Let's break down this lifeline piece by piece. Okay, these dates, you absolutely have to memorize them. The relief isn't forever. It's what's called a moratorium, basically a temporary pause on loan payments. But, and this is key, it only applies to payments that were due inside this very specific 4-month window, from September 1st all the way to December 31st, 2025. It's designed to be a short, sharp burst of relief. So what happens to the interest during this payment holiday? Does it just disappear? Nope. The RBI came up with a pretty clever solution. All that interest that racks up, and importantly, it's calculated on a simple interest basis, no compounding, gets bundled together into a brand new, smaller loan. It's called a funded interest term loan, or FITL. The beauty of this is that businesses don't get slammed with a huge bill the day the moratorium ends. Instead, they get to pay it back slowly the next year. But wait, there's more. Beyond just pausing loan payments, the RBI also loosened up several key deadlines for exporters. And just look at these changes. The time they have to bring their export earnings back in India bumped up by 6 whole months. The window to ship goods after getting paid up front, it's tripled. And the maximum time for export financing is also massively increased. All of this just gives exporters some much-needed breathing room to run their businesses. So, offering all this relief is one thing. But how does the RBI make sure the whole banking system doesn't get wobbly in the process? Well, it's a bit of a balancing act. Let's take a look at the rules they put in place to keep everything stable. First, let's do a quick refresher on a term I'm sure you know, but it's super important here. Asset classification. This is just how banks label their loans, from standard all the way down to non-performing asset or NPA. Understanding this is absolutely fundamental for the next point, which is a big one. And here it is. This is probably the single most important rule in the entire package. See, normally, if you change the terms of a loan, it gets flagged as restructured, which can be a real black mark on a company's record. But the RBI made it crystal clear. Taking this moratorium does not count as restructuring. Why is that such a big deal? It means an exporter could get this help without tanking their credit score or making it harder to get loans down the road. It's a lifeline without the penalty. Now, to balance out all this relief, the RBI put in a little safety net for the banks. This is that 5%. For any loan that was already a little behind on payments, but not yet a full-blown NPA, the banks had to set aside an extra 5% of the loan's value as a provision. You can think of it like an insurance policy. It was the RBI's way of making sure banks had a little extra cushion just in case to keep the entire financial system safe and sound. Okay, let's pull all of this together. We've gone through the details, and now it's time to consolidate everything into a clear, concise summary for your exam prep. Pay close attention here. This is the stuff you really need to know. First up, the foundational facts. You've got to know the policy date, that critical cutoff date of August 31st, and of course, that 4-month moratorium window. And don't you forget our mnemonic, ASO for eligibility. Next, the mechanics of the relief itself. The big things to remember here are what the moratorium actually covers, that simple interest rule for the FITL, and the specific repayment window for it in 2026. The last 2 points are a bit more technical, but they're all about giving lenders more wiggle room to manage these loans. And finally, the big timeline extensions under FEMA and the all-important rules. Burn these new timelines into your brain. 450 days for credit, 15 months for repatriation, and 3 years for shipments against advance payments. And, of course, the 2 huge rules. Taking the help is not restructuring, and banks have to make that 5% provision. So, there you have it. That's the complete breakdown of the RBI's 2025 trade relief measures. It was a really critical move, a temporary lifeline in a pretty serious global storm. But it does leave us with a bigger question to think about. Are these temporary fixes enough? Looking ahead, what are the long-term changes needed to make India's export sector truly resilient for whatever comes next? That's something to chew on. Thanks for joining us for this explainer.